Welcome back to the Spend Life Well Show, where we talk about all things faith and finance, helping you align your values with your wealth. I'm your host, Certified Kingdom Advisor Mark Trice of Clear Vista Financial, and today in the studio, I'm joined by Clear Vista Financial's newest financial associate, Sam Chapman. Hey, Sam.
Hey, everyone.
So today, we're going to talk about the biggest financial mistakes we see new business owners make, especially professionals stepping into ownership for the first time. And this is a passion of mine because over the years, I've had the opportunity to counsel a number of different entrepreneurs. At one time, when I was working with PricewaterhouseCoopers, we probably saw over 1,000 business plans a year and got the opportunity to coach them, and they made common mistakes. And we want to make sure that we're sharing that with you. So whether you're starting a practice, a small business, or buying into one, the early decisions that you make tend to compound quickly, for better or for worse. So we're going to start with mistake number one, and that is confusing revenue with profit. Now, this is one of the things I saw over and over again as I counsel small business owners. They assume higher revenue equals success. But the reality is that many businesses generate really strong top-line numbers but struggle with margins and cash that's left over. The reality is revenue is vanity. Profit is reality. Cash flow is survival. If you do not have recurring cash flow, your business will go through fits and spurts and things like that. So why do so many capable professionals fall into this?
I mean, we see for a lot of small businesses, how they get started is you have someone who is very skilled in their craft. They're good at what they do. And so they start their business, and that may not always entail like the financial management aspects. And so if you're just, kind of boots on the ground, you're focusing on getting good at what you do, you're going to bring in a lot of revenue, but you're not necessarily going to turn that revenue into effective profit.
I know a lot of entrepreneurs make this mistake, Sam, where they get into a pattern of, oh, there's money in the bank, so therefore I can go buy that next piece of equipment, and it doesn't really work that way. There's this gap here that we're going into. So mistake number two, Sam, is going into what you kind of talked about there. It's basically poor cash flow management. Profit doesn't always mean liquidity. If you're delaying payments to your vendors, or you have high overhead and even large upfront costs, like if you're having to buy a bunch of materials and things to get your business started, that can confuse the cash flow process as well, and managing that. So businesses don't always fail because they're unprofitable. The majority of business that I see that fail because they run out of cash. All right. So how can owners start improving this quickly?
We want to create financial clarity. And so, just having a good tracking of the monthly cash flows, just understanding, what's going in, what's coming out, having a good 3 to 6 month buffer, just for when those unexpected expenses come up. You're able to pay your vendors and take care of those things. Another really important piece, and I saw this when I was in banking, was separating the personal from your business. And the overlapping business, it can get confusing, especially like when you're going in to get a loan, and you have write-offs and different things. It makes it hard for the banks to approve people for loans.
Yeah, no, it totally so. And whenever I see this, I begged that business owner to stop and separate these things out. Now, I was guilty of doing this when I first started in this business, because it was robbing Peter to pay Paul and all sorts of different things. But as the business grew, it made everything much more complex, and it caused a lot of problems by not keeping that separated. So you need to make sure that your business financials are clear, easy to understand, and making sure we're making sense of that. Cash flow is king, though, right? Mistake number 3, ignoring tax strategy. Well, many owners treat taxes as a once-a-year event instead of an ongoing strategy. some of the common issues, Sam, that we have to deal with. They've got the wrong entity structure. I know that I was advised to move from a LLC to an S corp. So things there. They don't do any quarterly planning and they miss opportunities. There's so many changes for businesses in the One Big Beautiful Bill Act that was passed last summer. You may be missing out on credits for research and other deductions that are there that are short-term things, and that could drive your spending strategy a little bit if you don't watch that very closely.
Sure.
Sam, what's mistake number 4?
Fourth mistake, owners often reinvest everything and they end up actually neglecting their personal financial.
I'm confessing right now that I've done that in the past. I'm guilty of that, and it's so hard. But I will tell you some of the extremes.
Yeah.
I don't want to interrupt your thought process here, but some of the extremes that I've seen is that back in the early 2000s, I would see entrepreneurs that had a technical idea that required a lot of capital investment to get off the ground. They would have 2 and 3 mortgages on their house, and they're not only are they putting themselves and their families in the situation, they're jeopardizing the business too by doing those things. So what are some of the other risks that people do that when they neglect their financial structure or strategy?
You're stretching your income, so maybe your income isn't coming in as consistent, which that can lead to some cash flow issues there just personally. And then you're relying on your business in a way that you don't want to have to. And so just using your business as a tool and not counting on it as your entire financial plan.
But so many small business owners are that way. Mm-hmm. This is their baby.
Yeah.
And it is their retirement plan, their financial plan, their funding college plan. They're not putting it to paper, but they are doing that in a way that is potentially jeopardizing their entire financial situation.
Yeah.
I love small business owners, but we have to separate personal finances from the business finances.
Do you, in your experience, have you seen like business owners that need to do some investing instead of like reinvesting in their business? They need to just open a Roth IRA.
Sure, yeah, no, they need to be preparing for their financial future, but the go-to scenario or situation is, I'm going to put that money back in the business. I need a new vehicle for a new crew, or I need to buy equipment for the restaurant and or things like that. And so small business owners tend to neglect their personal finances and to basically prevent the business from growing faster. And it's a I'm guilty of it too. I mean, I know that happens. But we need to go back to scripture here with this. And Ecclesiastes 11:2 says, if you invest in 7 ventures, yes, 8, you do not know what disaster may come upon the land. And what they're talking about here is diversification in Ecclesiastes. Wide stewardship includes preparation, diversification, and discipline. That means take care of your personal finances as well as the business finances. We can't do one or the other. We have to make sure we're paying attention about both.
These mistakes, they're not about intelligence, but it's more about just the structure and the awareness of things. If you can put the right systems in place, you can avoid a lot of different mistakes. And so it's not just about the short term trying to get that growth, but looking at the long-term sustainability of things.
So, systems are an important thing. Maybe we should do another podcast on that alone. But systems are important. I saw a great article the other day. It was on LinkedIn or something, but they were talking about, having success with your team and business is not so much about training and things like that, but it's about the systems that you put in place. And the example they were giving is the women's 4x100 Olympic relay team. And every Olympics, I don't know how long, they had always had someone drop the baton. And they were just focusing on individual performance of running fast and didn't focus on the mechanics and the system of the proper way to hand the baton off. Your business is the same way. You've got to have systems in there so that you have controlled, sustainable growth. Most businesses are not the hockey stick that we read about in all the financial magazines. You need to make sure that you're going slow and steady is the way to go with that. So folks, if you're a small business owner, you'd like some help or another set of eyes on your finances, you can give us a call, but take time to review that financial structure, both your business and personal finances. Be proactive with your cash flows and your taxes. Cash is king. I've seen too many businesses. In fact, I was just counseling one last year, and one quick look at his financials, and you could tell that he was robbing Peter to pay Paul, and he was borrowing from himself to fund the company, which to make the payroll, and it just got worse and worse, and it was a snowball. And I didn't say this to them, but I'm thinking in my mind they're going to be out of business in 6 months, and it was 3 months. So if you want some guidance, folks, you want to get some help with making these major business decisions, I'd be happy to help you. Like I said, I've counseled thousands of entrepreneurs, and sometimes, and I kind of developed a nickname around the incubators that I worked in and stuff, was the hatchet guy. And that's because I'll tell you, like, this is not the idea that you want to get a third mortgage on your house for. We oftentimes, I know this wasn't the point of the podcast today, but oftentimes your eyes are bigger than your stomach. You ever heard that saying before? Your eyes are bigger than your stomach. And a lot of entrepreneurs look at the potential market in a way that deceives their ability to absorb and grow that. I know a lot of times we would get new technology companies would come to us, and their market was, if we can just get 1% of the Chinese population, we'll be filthy rich. And that's not how it works. You know, we should have a podcast on marketing and understanding your market and how that relates to your cash flows and things like that. So anyway, I'm rambling on. I'm getting the signal that I need to cut it. So once again, folks, if you need some help, reach out to us at Clear Vista Financial. We'll help you build a plan that's aligned with your goals and your values. You can always contact us at 254-282-0495, info@clearvistafinancial.com if you want to email us. And as always, we love you to follow this page and give our video a thumbs up. And as you can also see, clearvistafinancial.com, we've got lots of resources on there, lots of things to help you further your financial wisdom. Folks, Sam, thank you for joining us.
Yeah,
Until next time, folks, you've been listening to the Spend Life Well Show. Have a great day.
Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in the show should not be construed as recommendations or investment advice. Always consult with your investment professional before making important investment decisions.